Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We're going to have FOMC minutes at 1 p. Central Standard Time. Just a heads up in case you missed that. And you can assume there'll be outsized volatility and the rest of it. So mind your risk and follow your plan. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And if you follow the stream, uh, try to be here at the start of the stream since I go over a higher level overview of market conditions. So this way you can see how the pieces fit together. This stream is about integrating bookmap order flow tools with auction market theory, which is really participant behavior, how the market works, and using a tool called the volume profile, which is specifically volume and price integrated so you can see the behavior of these participants and the potential value they put on one price versus the other. Low volume at a price may indicate exhaustion. High volume at a price, even temporarily, may indicate acceptance. Think of it like shopping, which is the way I think about it. There's a retail price, there's high volume, sellers, buyers interact, everybody's happy. If the price goes too high, the buyers may not pay for it, the volume drops off, less buyers at a higher price. Kind of logical. If the price goes low and the buyers perceive it on sale, just like when you shop, um, you may buy more, but the sellers will not keep the price down there. That's why it's temporary. And then once they move the inventory or whatever their motivation is, they will raise the price back up to retail. And again, the price may go up from retail, then the buyer's exhaust. And this rotation is what we see in the market, and it happens in all time frames and all fractals. That's why when we actually think of the market, at least I'm just giving you a sense of how I view it, whether we're trading the intermediate time frame, um, the developing daily time frame, or even the microstructure, this process takes place in all fractals or time frames. And for me, it's not time based. It is really volume based and structure. So that's pretty much the idea of the stream. It is about participant behavior so you can decipher potentially what the participants think and see it develop in real time. And then it's up to you to construct processes to get aligned with that based on your trade plan. The other element that's really key, and I think this is where many traders have an issue, and I know I did early on when I was trading, was differentiating between directional moves and rotational moves and actually having a separate plan for different context, and that's what it's referred to in the marketplace. And trying to do a one size fits all is problematic because the market's not one dimensional, but multi-dimensional, multi-fractal, or multi-time frame. General disclosure, all bookmap limit. Hold on 1 second, guys. I got my trade station over here reaching out, throttling me. Actually, there's a lot of audio alerts going on, so I'm going to turn this down so it doesn't distract. I don't know if you can hear it through this microphone, but uh, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading, and past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. The idea of this stream is to help you understand market mechanics, how the market works, why it might do some of the things it does, and to assist with, shall we say, helping traders create a business of trading and extracting metrics out of the market that can give you a statistical edge. If you're random in your behavior in the market, and let's assume the market is random in the sense of the outcome of any specific rotation or iteration or interaction, randomness times randomness equals chaos. I don't think you can take chaos to the bank. However, you may be able to take extracted statistics, subject to, again, your vetting process and creating a plan to know when your trade shows up. Not a random rotation, your trade. If you knew where the edge showed up, would that be a trade potentially, assuming you did the work and extracted the edge, that you would execute? On the other side of that, a current trade that you take today or multiple trades, if they had no edge, but actually statistically were losing trades and you could see the metrics for it, would you continue trading that setup or whatever that manifestation is? That's the question. And I think the answer is obvious. But as traders, I think what many of us do is we think the indicator gives us an answer for certainty, and more indicators creates less risk. Well, I'm going to suggest maybe it's the opposite. Maybe more creates randomness. Think about it. And if it becomes random, how can you quantify it? If you can't quantify it, if you think about how Vegas works, you're sitting on the gambler side of the table, and the house extracts dollars from the gamblers because they play a game with a statistical edge. They don't play it randomly, they play it consistently. And these are all the terms and things you've heard about in trading, but it applies to all of us. Many of us, I think somehow we're the exception. Well, I'm going to say we're not. Maybe the thing to do is understand what others do and then become the exception and not do what they do. Just a thought. So let's think about the market naturally. What happened? The market yesterday did the Acapulco cliff dive. It was a huge down day, and those of you in the Trader Lab and those of you who followed the stream, we had, I would say, a lot of good opportunity and, of course, risk to participate in that market. Today is different. This is where uh, you need to understand context. Because if you're trading today like yesterday, I would suggest potentially this is not the same kind of day. You need a different plan. And when you see the market, and before the market opens, remember, what do? We think about what is the condition? The market sold off, shorts in the market. What happened in ETH? We took out yesterday's low, I suspect, and I don't have it right in front of me. And then we came back inside. So we had sellers in the ETH, but the volume on the low end of the ETH was light, which means, and in profile world, if the volume tapers off as the market moves lower, that means the price might be getting too low. And then the price comes back up and rotates at a higher level. That is suggesting potentially that shorts were covering in the ETH. So far, you guys with me? Grab a pen and paper, take some notes, guys. Maximize your time. Okay? Also, if you have questions, post them. I'll do my best. I suggest you guys post questions in YouTube because all the other posts that are in the Bookmap Discord Trader Lab chat and all the trades you guys post and all the other stuff, basically scroll off the screen. So if you post in YouTube, I can see them a little bit better. And YouTube, you've got about a 15-second delay, just so you know. So what do we anticipate? Well, if the market's short, there's a couple of things. In the Trader Lab, we talk something, remember, we even talked about it, I think, yesterday, something called responsive buying. Who are the responders? Who are the initiators? Well, if the market is short, that means there's shorts already in the market. If you're sitting short and the market starts rotating up, or it's just lower, whatever it is, and we opened in yesterday's range, you might cover. So there's two participants in here. The current shorts. So think about what can happen. Yesterday was a big day down. It's an outsized day. Market opens, we can get new sellers. Those sellers will put buy stops, or you could get just longs liquidating, right? So you got that too. So new shorts, long liquidating, that gives you a down rotation. Then buy stops. Once those sellers, if they new shorts come in, buy stops, and shorts currently in the market buy stops, that creates the potential for responders. In other words, they are responding. Buy stops are responding to the up move. They're not necessarily initiating. Okay. So that creates our up potential. So in this context, we are anticipating up to squeeze and take out weak shorts. Okay. Once that is done, and of course the magic is trying to find where, right? That's a different challenge. We'll talk about it. Then we're looking for something called mean reversion. That is outside in trading. This is different than get on the train and fasten, get on the plane, fasten your seatbelt, and we go for a large range. It's a different context. So we're going to be looking for that. Then the possibility is to continue south or just to rotate in here. Two-sided trade. So that's our possibilities coming in. Are you guys with me? So let's see what happens. So this is our open here coming up. By the way, session volume profile. This will show us all the volume at price, and it's important. So we know because remember, as I said at the beginning of the stream, all prices are not created equal. This 4010 was our retail price from yesterday. This is called the volume point of control where it closed. Remember what high volume is? Retail. Now, the thing about retail is it changes based on what the participants think a product might be worth. And the whole purpose of a market and why we even have one is to try to determine based on what the market might know or suspect, what is it worth? And the way that happens is called the auction, which is what's too low, what's too high, and it happens at all time frames. So we're coming to the open. And this is going to show us, this is the chart volume profile. It's going to show us the volume as it's whatever's on this chart, starting at the RTH open. This is when it resets, and so does this one. It's going to show us what's on the chart. This is the overnight volume point of control. This was the retail in the ETH. So not a lot had changed. This was retail in RTH yesterday, retail ETH. So we have somewhat of a fair price. So we can anticipate two-sided trade. I hope you're taking some notes. Because if this is where before the market opens, this is part of a trade plan. And remember, we don't know what will happen, but if you can anticipate what might happen, you will be prepared and you will have your setups already, which have been vetted by you. You'll know where your trade is before it even happens. So let's take a look at the open. And that's 830 RTH. So where is it? There it is. So the volume starts coming in. Let me open this up so you can see this. And I always get into the open because the open is difficult because it's fast and there's multiple time frame participants. In the Trader Lab, I recommend that traders have a separate plan. I do. Not saying you should. I do. I have a separate plan because it's fast and you have to be very nimble and I would suggest experienced to read it quickly. Because again, it's risk reward ratios and what do you think? So let's watch. So we're anticipating potential sellers, buy stops, and then shorts in the market potentially squeeze. And we don't know. So we don't know anything. So we don't know. Watch. You see? So in this, I have nothing to do because I look at this and I'm going, well, typically this is a Trader Lab short. However, the context, remember context suggests based on where we're opening, and we're opening in a fair area that we can potentially see two-sided trade and short covering. You do remember that, right? That's why I go through this. So let's look. RTH open. This is your what I call a variable high volume node. This was retail. Volume is moving up, retail. So what this is saying is too low, down here, too low, too low. This is retail. Pull back to mid and VWAP. Now for me, I'm not doing anything. Why? Because of this. Two-sided trade. Now this could be a short setup. I'm going to tell you, I was in no hurry this morning because I don't know where the outside edge is. Very conservative this morning. Watch. This, and I'm going to label this. I call this a variable high volume node. I'm just going to label, and this is what I do every time. And the reason I do this is for consistency and so I don't forget what was too high. And remember, what is this saying? This is retail. Now, the fact that it's retail, it's also, the other way to think about this is, if we're going up, this is too low. Okay. This is retail. But if we reject it, it is saying too high. Here is a short. Are you guys tracking? This is a Trader Lab setup. Are you guys with me? Does everybody who's part of the Trader Lab see this short? So guys, the thing about the Trader Lab, if you're new here, and I appreciate you visiting, is the goal of the Trader Lab is to help you, give you a toolbox, really, and also keep it as simple as possible. This is kind of, call it a foundation piece. And it's not, when I say foundation, I don't mean newbie. I'm talking about an understanding of market mechanics that you may not have. Here's why we come back here. Think about this. This consolidation, you notice there's directional move and then the pause. What happens right here? Right here is an auction. Let me show it to you. I'm going to take you inside. Now, when I'm looking at this, I'm thinking this looks like a short, okay? I'm thinking it, but I'm not one to rush in this configuration because I don't know where our outside edge is. You understand? Now, if you're very skilled, and remember, in the Trader Lab, I keep it at a certain level. Here's your volume. Let me show it to you. I'm going to show you some microstructure, and this is a little more advanced, but you're going to see something that's generic. Right there is high volume. It is a consolidation right here. And this whole structure is volume. And what's happening in here in multiple time frames are fractals. Let me show you the fractal. In other words, this whole thing is a consolidation, okay? This whole thing, chop, chop, you know, too low, too high. The shoppers, too low, too high. Up in here is the same process. Too low, too high, too low, too high, too low. Here, too low, too high, too low, too high, too low, too high, break. These are triggering short structures, right? You guys have seen this, you've been in this stream. Break. So trigger, break, pull back to volume. Volume, volume, volume. Watch. Test volume. If you have a vetted process, this is a short. If you don't have this as part of your plan, and I'm not suggesting anybody does, these are not recommendations. The more structured trade in the Trader Lab is the retracement. Here. Here's what happens here. Up here, too high. And it might just be a suspect. Like, I think it's too high, but I don't know, and I'm going to wait. Of course, we never know. But here's the volume. Now, this is, so developing more fractal, so shorter term fractal. This yellow line is the developing daily time frame. So retail and fractal, too high. Retail and developing time frame, I'm going up in fractals, okay? So too high, not, up to you. This, it looks like retail. We break away, and now the volume is here. Watch. This now is too high. I label it. I call it a variable high volume node. And like I say, I make these things up because I don't know what to call it. So years ago, I came up with that because it's variable and it's a price that was too high. Right here, what do? We come back and check it. This sets up your short. And here's how you would trigger this thing. High volume, break high, break low, trigger. Now, this is your volume right there, right where the white line is, and you would need to be selling it on a pullback, which would be this or this. Your stop needs to go here. It's still only 2 points. I'm good with that. How about you? Watch. You'd have a scale and you'd get taken out of the trade. Okay? Real world, guys. No magic. So let's look. Pull back to the VHVN, overnight volume point of control. Chop. So we got, here's the thing. This didn't quite get there, which was interesting. This is the actual location. So this is a short. We pull back here, stop, pick. This is another triggering structure. Watch. 40 to 7 stops coming out. Thanks for playing. That's these guys. 7, potential exhaustion. Iceberg. Watch. Now, same trade. Let's watch and see what it does. Break, short, and you would take a stop. Or you get a scale, actually. Up to you. If you entered here, 9, 10, 11, here your stop is here, you'd be looking to get short. And this is a tough trade because it's two-sided trade today. And you would think that we're going for the overnight high, which is this. Remember, there's over a 90% probability we take out either the overnight high or overnight low. Very choppy trade. Here's when you get out here, this is another short. Pull back here, scale. You're going for this. It's called mean reversion outside in trading. Doesn't get there. Very difficult trade today. Here's your volume. This is your short. You see. Going, and your scale or your target's ahead of the mid in the VWAP. Didn't quite get there. The idea in the Trader Lab is to get risk neutral. So wherever your entry is to where the trade fails, that's where your first contract goes to get risk neutral. And then you go with a runner or runners. We only talk about a 2 lot. Comes outside, picks the stops, and of course that's the one that gets to the target. But watch, high volume, high volume. This is called mean reversion. We always joke in the Trader Lab, yeah, it's mean. Why? You're trying to find outside edges to come back to the mean. So that's what this trade is. So this is your volume. You can see it there. Let's see if it comes back. See, another Trader Lab setup. And when I say setup, the setups are mean reversion. They're outside in. So it's all the same trade, but it's you're trying to find outside. Now this one, bang, buyers at the mid in the VWAP. Okay, come outside, back to the volume, which is now here, and it's a short, and you're trying to get back here. It's still outside in trading. Okay. You never know which one, do you? I wish I knew because I would skip the other ones, you know. Now, let's talk about targets. I think at the time, if I remember this one, let me just remember. Can't remember these. There's something about 4005 that I think we have to talk about. Yeah, make a note about this right here. 4005. I'm going to put something in here and then we're going to talk about it, perhaps. If I can remember it. Should take notes. I'm going to label this. I'm doing something a little different here today because I want to show you a little something. And you know, I'm always cautious to add anything because some of you may run with it right away. And it's not necessarily something you should add because you don't need it, but it's something you can add. So I think it was 4005. So let's go. So anyway, this is your short, finally. And you have 3990 down here also with about 700 contracts. You need to be conscious of that. This is what Bookmap is going to help you with. Why are 700 contracts sitting down in here? That's the highest liquidity in the limit order book in the neighborhood. You want to be conscious of that. They're sitting there because potentially the market's going to go there. Now, I say potentially because nobody's going to know anything. So let's watch. So let's watch. I think this is the right level. Let's just see what happens here. Do you see this? 4005. Are you guys with me? Grandala, it's supposed to be retail because the trade size is small. Can you expand on that question? And I'll try to clarify that. I don't quite understand that. So this liquidity, I labeled it and I looked at it. Let's look at the behavior here. I got to turn something on here so you could see something. By the way, there's a new version of Bookmap coming out. By version, I mean an upgrade that you should get notification on, version 7.4. And you're going to need that for enhancements that are coming out. There's a lot of super stuff coming out, especially on the dome and multiple brackets. In other words, similar to strategy orders, that'll be server side. A number of excellent items. Also, the ability to draw on here and expand it so it keeps going. So if you, for example, if you drew a box or a rectangle around high volume, and it still needs a little tweaking, it would not stop. It would just keep going. I find that pretty useful. This is kind of why these VHVNs and HVNs are on here, but it would give you something that you know it's sitting there. So these are some, I'm just mentioning it, and there'll be more information on it. I don't go over that in this stream. There are others who are much more knowledgeable about it than me. So this here, they added here in the book, it traded out. This is material. And you're going to go, why is that? Well, a couple of things. First of all, let's look at this. This at the moment is too high. This was the last area, right? We come down, we take out yesterday's low, we're outside of value. We have the overnight stat, which remember, we don't know which one. Over 90% probability we'll take one of those, okay? So that was the target on this short from up here. Now, I don't know about you guys, but if I was on a trade like that and I have a statistic and I see we missed this and I see this selling, is it unreasonable? Once the train gets rolling and we already had our buying potentially, the short squeeze, that we would continue in the direction of the trend. And I'm going to say maybe, and who knows, right? So that was the target. And I consider this a pretty nice trade. So even if, you know, if you weren't able, wherever you want to get into it, you can get into it, you know, it's up to you. You have to follow a trade plan. So, you know, down you go. Nice trade. Now let's look at something else. This is called VPOC migration. I'm going to show you another Trader Lab setup. Now you have to remember the condition. Oh, come on. the condition of the market. What do we get? We come down, we get our overnight stat. It's now 9:15 in the morning. At 9:30 Central Time, we have another statistic called the overnight high, or the overnight, I'm sorry, the initial balance high and low. That's what IB stands for. And all it means is first hour high or low. And statistically, and again, past performance not indicative of future results, any statistic I mention you have to vet. There's over 90% probability of taking one of them out during RTH. Well, considering the lay of the land, considering we have all this liquidity, 700 contracts sitting here, and you can see it on the heat map. Remember I said earlier, this potentially is going to get traded, maybe. And again, it's always maybe. So where's our opportunity? Well, if we are directional, then potentially if you have a setup for this, then mid VWAP. Let's go look. And what else? 4005. It's material. So let's go look. And this is in the Trader Lab. Now, whether or not you take these trades is totally up to you. You know, these are not trade recommendations. But let's look. So we come up, selling icebergs, location. I'm looking for exhaustion. 76 stops go off. And in this area, what's important to me is get what I call a stop pick. Retail trader behavior, they put their stops at the mid. Great. Do I want to put my stop there? No. Do I want to wait for that? Maybe. Subject to your plan. You need to vet triggers and setups. If you don't, if you're at a retail location, you know, where we anticipate your retail trader behavior, do you want stops to come out, or do you want to get in front of the stops? Because this can come up and just blow right up here to VWAP or not. But here's what we get in the trigger. And I suggest you guys think about this. This is what's in the Trader Lab also. There's 60 PDFs of this behavior you can download, so you can kind of look at this stuff, kind of think about it, you know? Plus a primer webinar I did that kind of gives you an overview of this process, which you may find useful to integrate, you know, into your plan, or if you don't have a plan, to start thinking about if that might be useful. Traders I know who do this as a career, have it all planned out before it happens. They know that under this condition, if you get this, and we didn't get above, remember, then potentially, and we're below yesterday's retail price, you see, you start putting the pieces together, then potentially we can roll down to that liquidity. Again, nobody knows. But here's the trigger. Let's look at this. This is what's so neat about Bookmap, is you can get inside. So this, not a good spot, though that looks like a short. My trade plan, now I can tell you, it's not that I can't take a trade here, but I prefer this. I want to see stops come out because of, and then I see this liquidity taking the other side. This is how the heat map can help you. So I see these guys come in. There's buying is the buy stops, and these are holding the market. So let's look. Break. So we have a trigger. Now we want to see what's going to happen here. Right back up here. Volume, but no pick. Pick. I call it a stop pick. They ever get your stop picked off? Pick. Because that's where the buy stops are. And now what? Selling, pull back and test. Now look, let's get in the Bookmap a little closer. And this is just one way to look at it, and you know, you have to decide if it's for you. Hold on 1 second. Okay. Selling, and it's really a suspect at this point, you know. But here, so volume, volume, volume. We're under here. That is still in the book. That's like pressure, wind at your back. This is a potential short. Now, The range on this is very tight, right? Until this drops down. When that drops down, that is adding wind at your back because it's saying what's up above is too high. Also, look what happens in the order book. See what's happening? That's like wind. Let's just go and see. Now, the other part of this is, remember, where's our target? It's down at 90, right here. Okay. This comes down. Now, for me, this is the short. This is a potential add or a potential short right here. And this is a trader. I call this VPOC migration. It's also another setup in the trader lab. But this is your target. You need to decide, subject to your trade plan, whether you want to play in this range, and your stop would be above here. So this is your target. Target. Are you guys tracking? Mike, I don't have the time to do I do it verbally. I can't show the chart of the higher time frame, but I give at the start of the stream. And if you guys are interested in the higher time frame overview, I start sharp at 10:30 Central Time, 11:30 Eastern Standard, and I always go over the higher time frame in the context. So if and if you're in the Bookmap Discord Trader Lab chat, you can always review these streams. They're available for 24 hours. Um, do your homework. And in fact, if you're watching the stream, probably a good thing to do is to just take some notes. And if you see something interesting, notice the time stamp on it, and then speed through the replay and on the Discord that's available in Bookmap Discord Trader Lab chat of the YouTube, and then you can maybe take screenshots. Isolation. I have binders and binders and binders of these behaviors that I researched over the years, and I have more binders that have been thrown in the garbage they, you know, care to think about of all the stuff that I've jettisoned. But at some point you start seeing certain things and certain behaviors, and if you can quantify them, you know, and you understand, and it takes time to understand everything. But what I want to suggest to you guys is you don't need all the understanding initially. It's like a broad stroke, um, and interpreting a language. I always think of the auction as the participants are sharing with us their perception and their price discovery process. This is a long trigger here. Now, for me, it's not, I didn't participate in it, but it is. I'm going to show it to you. And here's what makes it interesting. This is a target. Now you don't know, like everybody, it's always a mystery, right? What's going to happen? I don't know. So write that down. You don't know. Take yourself off the hook for needing to be right. It's not your job to be right. You can't. What you can do is know you have a statistical edge. That's where the being right comes from. Being right is your accountability to a vetted trade plan. Just like the casino, they play the game the same way, but they know they have an edge, and they don't change the game so they can lose their edge on it. They just play it the same, and they look at losses like overhead, cost of production. That's what we do. If you're a professional trader, you really have to reframe and put it and understand that your emotions are going to run wild on you, which is just part of our humanity, if you will. So you can't get rid of the emotional state and all that voice in your head. I ought to get out now. It's going to fail. I'm going to move my stop, or gee, this doesn't look right. No, what's that? That's Hyde. Jekyll and Hyde. That's those emotions that are running rampant, that are speaking in your ear, and you'll think it's logical, and it's triggered by emotions and chemicals. So the vetted trade plan is to help you manage all that, because your accountability is not to the randomness of the market, it's actually to your trade plan. And if your trade plan has an edge, then over time it'll show up. but you need to develop the confidence in order to execute a plan. So here's the, look at this. Let's look at this. So this liquidity was sitting in the book. We came into it. 103 stops went off, and there's absorption right there. Okay. So 158 transacted right here in this liquidity. Right in here, so you have the 103 stops. I don't pick the bottom, so for me, it's not a trade I do. Whoop, come on. But you can see why it was important because of this. Look, there's still 649 contracts sitting down there, which might mean at some point we may come back again. So this sets up a context called mean reversion. And now again, I'm going to remind, and this is a setup in the Trader Lab right here. Let me explain what this is. Now we're outside of yesterday's range. So for me, it is not a long, but it is a Trader Lab mean reversion long. And what I'm going to mention to you about it is two ways to use it. If we are inside of yesterday's range, it would be a long. It's a counter trend trade. It's called mean reversion. In this, and this is up to you. It's not up to me. I'm just telling you kind of what I do. I'm more inclined to just wait for, specific conditions, but you can kind of do your thing. Always it's based on the metrics. So this says potentially to come back to high volume up above. This is called mean reversion. And mean reversion, so once we see this behavior, then the context has changed. And in mean reversion, let me just try to show it to you. See, we're outside of yesterday's range, so there's no long. So mean reversion means back to the mean. This is retail, so that's the mean. And then the potential, since we're coming back in the range, to come back to the other side. So if this is retail, and now you have too low, now where is too high? And good luck with figuring that out. But this puts us back in the outside in configuration, potentially. And here's another one. In this trade, and you could write this down, it's called the IBF, not necessarily a long, but if you think the trend is down, potentially set up for outside in short, not a recommendation. And here's where it might go. The targets for this trade are the mean, so mid, VWAP, mean, and developing value area high. And where is it? I think it's covered up. Hold on. I got to try to find a level here that's probably covered up. Hold on. It's the developing value area high. Can anybody tell me where it was at the time? Because I can't find it. Maybe it's up here. Yeah, there it is. So roughly this is the target potentially on that long. Are you guys with me? So let's see what it does here. These are structured trades that are in the Trader Lab. And again, like everything, they're ideas, they're not recommendations. Oh, here we go. And this. So we have this as an obstacle. Remember, it was a short earlier, wasn't it? So potential to come here and here. Okay. Oh, there you go. No clue. Let me mark these up. So this is the next target up here. Okay. And this. Are you guys with me? And I don't know where the market is since I can't see it. So this is as much a surprise to me as anything. Especially, you put a trade on and it's like, what's going to happen? I don't know. So too low, too high, target, and target. Now let's go look. Okay. Are you guys tracking? Let me make sure I got everything in here that I need. Okay. This is a Trader Lab setup, by the way, you know, that IB. And these are your targets. Here, 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 here. That's called the IBH. IBF, I'm sorry. Losing my mind. Yeah, Sheena, I'm sorry. I've already kind of explained all of it. The just try to be here early. I start at 10:30 Central Time. I give a overview of the market condition and what we might anticipate. Today's two-sided trade, so it's a mean reversion mostly. So it was looking for the long squeeze early, looking for the shorts for continuation down. Now it's longs, or potential short for mean reversion. So um, this is an important area. We're in a long setup here that has to be vetted in the sense of right here to here to here to here. That's the long. It's not a trade I would take because I'm a little more um, just part of my plan. But in the Trader Lab, this is a trade that many traders take. It's available. In fact, if you want to if you want to review the stream, if you go to bookmap.com, you'll see a link. Join the Discord chat, and it'll give you access to the Trader Lab, all the resources. There's webinars, 60 PDFs you can download of these setups. And, all this is the Trader Lab is a toolbox of ideas. And the goal of the Trader Lab is to help traders become career traders by understanding this is a business of statistics. In other words, probabilities. So let's see what happens at our level right here. And that's our target. So, we got a couple of pieces right here. So potential reaction here and or continuation. Now, again, let me give you another possibility. So right here, here, and potential to take this out. And basically what it is suggesting, the possibility of what's called a two-sided day. So, or a neutral day. But if we don't get up above in here, we can rotate back. So it's a suspect at the moment for outside in. But if you're interested in reviewing this stream, and they're available for 24 hours for all participants in the Trader Lab, you would go to bookmap.com, join the Discord chat. You don't have to be a Bookmap subscriber. You won't be solicited. And there's a lot of additional education. Order flow, stocks, options, market maker behavior, algorithmic behavior, and much more. And of course, the order flow to the max, which is very important to try to, I think, gain edges over other traders that don't have tools like this. This is a high tier order flow tool, and it does help substantially. It helps me, I'm just saying, see inside microstructure so I can read the behavior. This is stops, icebergs. All of this adds another level of insight to participant behavior. So let's see if we get our next target for the IBF. I must be tired or something. And don't forget, we have FOMC coming up, so I'm going to suggest to everyone that you mind your risk. I have a specific plan for reports. I also have a different plan for the open. And then this is sort of like open field running. And even this is contextual. This is mean reversion trading. It is not get on the bullet train like yesterday. So different. So I suggest that traders try to understand the different behaviors and then isolate the behavior and then actually have setups designed for the behaviors. So this is our targeting. And remember, the market can do anything, and these are not trade recommendations. Brian, it's what I do. What I try to do is, do I take IBFs? What I do is not so material. I don't think. I mean, I'm going to say that because I've been doing this almost 43 years. But in the Trader Lab, it's really about creating a foundation of understanding market mechanics and vetting setups, and then having the other part that's really hard for us is actually doing what we're supposed to do, like waiting for our trade and developing the discipline not to feel the emotions. Because we're going to feel it all the time. You're sitting as a tourist and you see a 30-point trade go by, you're going to have feelings about it. The thing that becomes important, and most retail traders never get to a place where they can accept that it's not their trade, because ultimately it's developing the discipline to let go of the emotional state of how you feel about it that actually determines the potential longevity to survive and become a career trader. You can always add, you know but if traders, and I'm not speaking to you, I'm saying generically now because everybody's different. And watch the book thickening up here in the location. So let's just watch behavior. Okay, we have exhaustion, we have liquidity, potential triggering structure, not a recommendation. We have alignment. We'll see what it does. No clue. Not my job to know because I can't know. But let's watch this. And guys, this is not a trade. This is just a suspect. The suspect is here in the volume. If we don't, if we can't get above this, it potentially sets up a trigger. If we come back above, then there's nada. So let's just watch. Take a note, take a time, because this could fail as much as anything else, and I'm not recommending it because we can still come out the top end and take the shorts out. We'll have their stops over the high of the day. That's always part of trading, right? So let's just watch the behavior. So this is above the volume. It has to come under this. So let's see what it does. And if it does, maybe, and it's not a recommendation, then you're looking at this. Let's watch. Remember, this is not a trade calling room. It's just maybe. We're right here. We're coming above the volume. So this is not, you might say, it has not quite happened. It is fermenting. If we come above here, then there's nothing here. Let's see. Right where the white line is. That's where it has to break and push away from it. So we're testing the high. We have an iceberg and liquidity. What you have now, when you see icebergs like that, what happens if they transact and they finish and then they're done? Does that open the hatch? And that's very important. So we know there's an iceberg going off here. We know there's liquidity in the book, and we have to see the behavior here. So this is critical mass right here. So we'll watch it. It looks like it's going to continue higher. You see? So that's why nada. So when I see icebergs, what I want to know is what's the behavior after the iceberg executes. And again, nobody knows. So when I see that iceberg, and lots of times, we see an iceberg and the market goes, right? But often, if you see an iceberg transacting, and for me, the fact there's an iceberg and there's not a reason to step in front of it, it's not a signal, it's not anything. What it's telling me is there's somebody absorbing the buyers. Now, here's the thing. If an iceberg, which is a seller, is absorbing the buyers and there's more buyers after that iceberg is filled, what do you think is going to happen? Well, the seller is done, the buyers, you see. So then we get your squirt. Now, what happens after that? Let's watch. We're at a target area. We're at an outside. Now, remember, there's buy stops here. So this is vulnerable. If we don't come down under this, then potentially these guys are going to be on the hook. So let's observe the behavior. I just want you to see behavior. This is not a trade calling room. So let's watch. So this is your potential trigger. You see it? So this would be your potential short here. And you have to get risk neutral. Now there's the buy iceberg, might be disrupting the whole thing. These are called mean reversion. And they're problematic in the sense of when you start trying to trade mean reversion, you don't know where the outside edge is. So they're pretty hard. Like here, you see, you get the rotation. Okay, this has to stay right below here, or else this will be over. This is coming up underneath. That skews the book. We need them to pull and not trade. If they pull, it opens the hatch. If they stay in the book, then we may go north. We have to see the behavior. Okay, they pulled. And this down here is the target on this. It might be what we call the Hail Mary pass. That's a football term, American football, where they just throw it in the end zone. So this is your short. Your job is to get risk neutral, to buy the stop on your runner. And these are hard because of trying to find the outside edge. So let's just watch this one. Okay. So depending on your entry, so there's your trigger. Here's your pullback. This is your short. Stop here. And again, I'm not calling trades. Your job is to whatever the distance from entry, wherever it was, to failure is the target on the first contract, wherever. Now your stop stays here, and your runner, two ways to play this. By the way, this is the target at the moment. And if it stop here, so assuming you get scaled, now the worst that can happen is you scratch the trade. That helps you psychologically to actually stay in the trade. The other piece is a trade management process that you need to vet. In other words, what's the best way to manage this? Do you let it come all the way back and scratch? Or do you have a process where potentially you get other selling structures like this, and once it triggers, maybe you manage your trade behind these, maybe two back or something. And again, you have to vet that. Are you guys tracking? Just trying to show you ideas. That's exactly right, Hazler. Stops are there. Caution, I just have a plan, and I still feel my emotions. Caution is asking, how do I manage my emotions? I used to think I could suppress them. I mean, it was like I wanted to have a cattle prod at my trading desk so I could and I ended up with a rubber band on my wrist to try to do behavior, like thick rubber band, and snap it when I would have those thoughts. I still get them, so that didn't quite do it. Um, what actually for me was very helpful was knowing that I had the statistics, and when I would have the emotions, I figured that's just that's Hyde, Jekyll and Hyde, Dr. Jekyll, Dr. Hyde. Hyde was the crazy, unbridled emotions. Well, all those that talk in my head is being generated by an emotional state, which is chemically induced. It's released, oh, don't step in front of the bus, oh, get out of the way. Oh, you're going to get run over, all that. Well, that has nothing to do with trading. That's fine when you're out in the outside world, in the non-trading world, but this is the trading world. It's like it's got its own behavior, and the way around it, to answer your question, was statistics, and then opening to the trade plan and going, okay, this trade has X% probability that I'll get risk neutral before a full stop. Then what is the probability this trade will get here? Well, that's something else. What is the probability that if I manage the trade with a certain process that I'll get, what is the best way over time to do it? We all think we want to go for this, but the market participants may have a different idea. Our job is not, we don't have any control over what they do. We only have control over what we do. And the statistics give you the ability to manage the emotions. So if you know where your trade was, and remember, where was the target for the long? It was right there, right? And if you're following the stream, that's the IBF target. which may or may not be part of your trade plan. Um, and in the stream, I kind of keep things very structured for Trader Lab participants because they have to vet it. So if I'll give you an idea, in this context, the IBF, which is the mean reversion trade outside in from down at the low of the day, has more risk to it of not doing its thing than if we were in the previous day's range. However, we're now back in the previous day's range, and that's what this is the target. Okay. Now the next problem is this. Stops here. Now here's the other piece for you guys. If we take out the high of the day, here, let me get you a statistic. You might find this interesting. Let me find it. Okay, hold on. There's a, let me just see. I'm looking for a statistic on what are the probabilities of taking out both the overnight high and overnight low. It's 24, almost 25% that we're going to take this out. And the probabilities of taking out both the IB high and the IB low, let me just find that for you. Got a lot of stats here. I got to find them. But you see, statistics are kind of important, you know, very important actually. High. 29% probability that we take this out. So we have a 29% probability to take out the first hour high, first hour low. Okay. And then to take out the overnight high, overnight low, which I already forgot. I got to look again at these stats. There's a lot of them. Sorry about that, guys, but I'm looking at a sheet with a lot of numbers on it. 24%. So we can take this out, even tag this. If we come back in, we're going to come back here potentially. This is, again, mean reversion. So this short, you'd have a scale and it is going north. So potentially here. We'll see. And that's as complicated as trading is, guys. It's just probabilities of one thing happening over the other. You know? So in the Trader Lab, if you can get this here, if you can get risk neutral, the worst that's going to happen, you're going to scratch. And by the way, the trade fails here. It hasn't failed yet because your stop is here. Are you guys with me? Uh, Tragic? There we go. Tragic is asked me a question. What are the difference on the icebergs with lower opacity grayed out versus the ones? Not really much difference. These are larger. It's just a filter. So these stand out and I don't see the minutia. That's all. That's all it is. And I want the stops are more important to me than the icebergs for me because retail traders use the stops. Most more sophisticated traders do not manage their trades that way. So if I see the market moving higher and I see exhaustion, then who are the buyers? See, is it stops? So this trade fails up here and it has not gotten taken out. So this short is still on and you'd be risk neutral. Now here's a question for this astute group. If you were sitting all in, all out, well, be honest with yourself. When it comes back here to the volume, okay, but what happens when it does this? Would you have bailed out right here? Oh, it's going to fail. Anybody? Yeah, we all used to do it. Trader Tay, you never did that. Well, we all do that because of fear and FOMO and fear of loss, fear of this. Oh my God, it's going to fail. Why should I wait for my stop? I'll save that 2 ticks. I can't tell you how many 40-point trades I missed in order to save 2 ticks or 20s or 30s. It's beyond, But by the way, here's an idea for you guys. And I haven't brought this up in a while, but I want to mention it. What helped me a lot years and years ago, I'm doing it almost 43 years, so I've had the chance to make more mistakes than most of you, or probably really most of you. And, with a lack of understanding and more bringing beliefs with me and trying to make trading fit around beliefs that I brought from the outside world versus understanding that trading is its own, like landing on Mars, and you have to adjust to the atmosphere and the actual reality of what it is. We bring what we think we know, and now we're going to become traders. But if you don't know what trading is, and it's not indicators, and you're trying to make it fit, you're going to find it difficult. I did that uh, early on when I started in 1980. But here's the thing that I found helpful. What it was is I created something called an error cost calculator. So I would plug in trades I didn't take, and why don't I take them? Fear. Stops I moved when I shouldn't have. You see, um, bailing out, and I quantified what that did. Instead of just moving on to the next trade, and my mind is now on to the next happy meal and not looking at the cost or the consequences, you see, um, it wasn't quantified. What I found was I was the reason, not the market, not the randomness of it. It was me. And imagine this. Imagine you're costing yourself $3,000 a week and you're not thinking about it. And I don't know, that's all subject to, whatever you do, right? Number of trades. But in the ES, if you have a vetted trade plan, you can certainly be profitable if you could actually extract that edge statistically and then have the patience to do it. And then the times you don't do it, what does it cost you? How about you might already be on the path to being a profitable trader, but you're sabotaging yourself because you don't know what the price is, other than I want to do better, I want to do better. Yeah, we all want to do better. But if you could put a dollar amount to it, write a check out, write it out to your broker or the other retail traders and put it on your monitor. When you see $2,000 a week, fit whatever the number is, and put it over a month, and there's $5,000 or $6,000 that you are just throwing away, is that going to help you change your behavior? Think about it. Well, Dr. Phenom, the thing that's really difficult, Dr. Phenom is saying that staying in the trade is the hardest part, um, because of the time frames. It really is. Uh, I've always wrestled with that myself, is what time frame am I trading? Because it's almost like a one size doesn't fit all. So I've kind of broken my time frames down to a certain extent by, targeting and fractals. And if I'm trading, in other words, if I have runners, and this is not really material, depending on where you're at. By you, I mean everybody generically. Um, but if I have runners that are, and I don't have high time frame targets here, at, in this context, but if I'm looking at a higher time frame for a runner, I have to give more back to sit through the rotations, and I've always found that my mind wants it all. Well, I should have done this. Well, I should have, anybody with the shoulda, there is no shoulda. What there shoulda be is a plan. Again, not for you, doctor. I understand. The So what is the designation of the contract that is quote a runner? But if traders are running a two lot, then it's primarily to specific targeting based on the setup and combining a trail management process that's also vetted. So this context is potentially outside in trading. And where's the stops? Now they're up here. So statistically, we can come up here and we can come up here. Now, here's another piece to this. We're inside yesterday's value area. Theoretically, we can come up here, and this was a target coming down yesterday. I leave it on here. So subject to, we can just come out, come in. That's one possibility here. Or we can come out, get to here, get into here, and come back or stay in here. I have no clue. But this is two-sided trade. It is its own behavior, its own context. It is mean reversion outside in. The thing you don't know is always where's the outside. So stops and potentially to here or out here and then back in here. So that's this context, and those are Trader Lab areas to observe, which is the way I like to think of it. Okay. Any questions on this? So there are, you can see the liquidity coming in up here. Let's look at what it is. So right at 20, we have 375 contracts. They're probably going to trade out. It's right ahead of the overnight high. We get it through the, now there's another couple things here. So we have what's called balance. Balance is two-sided trade. That means the buyers and the sellers are active, which we could see. We got down to that liquidity on the bottom. We filled some, and now we're coming up to the other side. Let's go take a look if there's anything sitting in the book up here that's material. At the moment, not really. So here, here. So what's our next opportunity to observe? It's going to be this. Pop outside and then potential mean reversion back to here. Now, I have no clue, and these are not recommendations. But here's how I look at it. When I come into this, I know I'm in the context of two-sided trade. I know the market is short, and I know that buyers buy stops are above the high of the day. I know if I come out to the target of the IBF and I can't get back to the mean, then, and we had that short, which was a scratch, then the next opportunity is going to be after this. And I don't, like everybody, I have no clue. It's not my job to know. My job is to look for behavior and exhaustion. And if we come back inside, it sets up the same trade from the bottom, the IBF, from the other side. And again, it's not a recommendation because we can keep squeezing, that's part of the thrill. So this is our area after this. Then it can squeeze and squirt. In other words, buy stops, and then you got to see if we get exhaustion and then potential for a short back under here and, potentially back, and we will see. And I really don't want anybody to be doing this, of course. And by the way, don't forget we have FOMC coming up. And here's another thing to think about. Squeeze out shorts, and then what? Longs square up in front of FOMC. We have to remember that. So let's watch the behavior. These guys are pulling. That's another thing about liquidity. It is like walking on a slippery banana peel because you don't know their intent. Here's our stops coming out. Let's watch now. Did we hit the IB? Let me just look here. They were absorbed. Iceberg on the other side. Location. It's easy to get run over right here. There's no trade here. Remember, often, unless it's a huge iceberg, which absorbs everything, often what you get is a reaction and then If they're done, we can continue higher. These are things you need to study and understand. It's another piece. And Bruce does order flow Monday, Tuesday, and Friday. Uh, and if you come to Bookmap Discord, you can take advantage of all this free education. It's free. You don't have to be a subscriber to Bookmap. You don't be solicited. Also in the Trader Lab, there's 60 PDFs you can download of these behaviors. And you need to vet everything. The Trader Lab's a toolbox, you know. So let's watch right here. We're watching here. So now we want to watch. Micro high volume, break inside. This volume is key. All of this right here. So we want to watch. This is a potential short. It's not a recommendation. Watch. I mean, this is aggressive because, you know, it is because I find mean reversion mean because you have to really be careful with it because all you might be doing is getting into a counter rotation and then the squeeze continues and these buy stops become fuel. So that's just really what it is. And there's no way to sugarcoat it for you. This is a short and you have to get risk neutral and your stop goes here. This is the same trade we're looking for from this location. It's all the same. All it is locations like real estate. This is the target. Extend it and you would manage the trade. Are you guys tracking? Can you kind of see the logic even though it's you know, curious, the difference in trading ES over SPY is the leverage, liquidity. Well, SPY is very liquid, but what I'm going to say is it's the leverage. Um, I mean, if you're day trading SPY, I don't, you know, it's up to you and your metrics. It's really metric driven. The process is generic. You know, the way the market behaves, it's the same. It's all built on the same mechanics, and that's participant behavior. So the trade short, scale, you're risk neutral, stop stays here, you put your helmet on, and now you either manage the trade or whatever, and this is where you're headed. And this is called the IBF, neutral IBF. Again, not a recommendation, but, and you know I don't call trades, but I'm narrating, I don't know, I think the real world here. There's nothing ideal about this. But here's what's ideal. You'll notice I spoke about the trade before it happened. That's what having a trade plan is. You're like a hunter. You're in the wherever, you're in the jungle. You're behind the tree. You anticipate where the game or your target might show up. You don't make it up. You don't chase the rotations or the saber-tooth tiger that doesn't come past your tree. That's what setups are. And the idea of a setup is that it is vetted. In other words, it has an edge. Now, whatever happens here, I have no idea. My job is to say, where's my trade? Where might it show up? Two locations, here and here. That's it. Now, if it comes outside and keeps going, I'll be looking up in here. I already know that. And this is my target. This is the same trade that we were playing with over here. Same trade. See? Nothing has changed. Location has changed. Are you guys tracking? Yeah, you're welcome, TJ. Uh, tra- Tragic is mentioning TJ about the advantage of trading the ES over the SPY, and he posted this in the Bookmap Discord Trader Lab chat, which you're all invited to visit. Download the PDFs of setups and the rest of it, and a couple webinars I did. He says, I personally prefer futures versus SPY, more time to trade. You can start with a small account if trading micros. So in the micros, I think are a dollar, I don't know, what are they, $1.25 a tick or something like that? $5 a point versus $50 for the regular ES. So, and you got depth and liquidity. stops and limits and the rest of it. So you might find that useful. Um, but whatever works for you. I mean, this process that I'm showing you works across all time frames. Um, Swing trading, option strategies. I mean, everybody does their own thing. I don't use any indicators. I do use detectors. This detects the tags. This is rhythmic data and it's CME data. That orders are tagged. If it's a limit order, a stop order, a market order, the exchange needs to know what it is, right? So these are buy stops. We can see the stops going off. You can see the icebergs going, selling icebergs. This is the limit order book. You can see it. And Bookmap helps us visualize all this. And for me, that's a huge asset. I never, used to, who knew, right? What was going on? Well, at least for me, that's why I got Bookmap. Because I can see inside this now, and I could never see it before. I just couldn't get my time frame down and understand what was going on as well. So this gives me just more structure and insight. So that, short, you know, this is your trigger. So this is your short, or if you're very experienced, you could get in a little quicker. Ultimately, this is like reading music or translation of a language. Once you can speak the language, you'll be able to interpret what might be going on and when, assuming you have a vetted trade plan and a setup, which is this, to interact with the market and take your risk and, you know, do your thing. That is really what trading is. The trade plan has to happen before I think the ability to become, and it's personal opinion again, not a recommendation. The ability to become a career trader comes from having a business plan and a trade plan. Think about if you want to start a business, do you wing it? Or do you actually know what it costs you to produce a widget? What does it cost you to produce a profit in trading? If you understand vetting a setup, if you understand that there's a statistical aspect to this, it may change the way you experience trading. It's not a video game, it's really a business. And many retail traders think it's indicator based business, but it's not. Indicators are a proxy for participant behavior. If you understand what the participants are doing and you understand the context, which is potentially outside in trading, you would actually have a plan for this, which is what I'm discussing here in the Trader Lab with you. Is that this is not get on the bus and ride it to the moon, Alice. We're in a downtrend. Market is short. We have sellers today, and we know the market's short. We know we can squeeze these guys out who are short. We also know if we take weak hands out and there's no buying above it, which there can be, that then if there's no buying above this where the buy stops were, which was over the first high of the day, that we can come back down inside. That's all we know. Will it do it? That part, don't know. Hope you get something out of this, guys. Hope you find this useful. This is the Trader Lab, guys. And the idea of the Trader Lab is to help traders become independent career traders. It's not for everybody. I mean, trading is not for everyone. It really takes an adjustment in viewpoint of what trading is. I've been doing it almost 43 years. I'm ashamed to tell you how long it took me to kind of figure this stuff out because I started with system design. I was a swing trader, and those of you who've been on the stream before know this, but I was a swing trader and a trend trader. There was no day trading when I started. If you were a day trader, you were on the floor. So, and early on, I got introduced to oscillators. I shared an office with George Lane. He actually created stochastics. So you might say I have some of that in my blood. I thought the Holy Grail showed up. And of course, not so much. But you don't know. And then I created systems and went from there. So um, I have quite a bit of background. But that is neither here nor there. What's relative in all of that is I had to change what I thought trading was to what it is. And it was me that had to change. and I kept, what I was doing was I kept using derivatives of a process that ultimately would break down. It was curve fitting. And I was inconsistent, which is why I went to system design to create consistency and the metrics. So I'm just giving you the 2 cent tour about a little bit about me. And ultimately, I became a money manager, and did manage some substantial numbers over the years. Uh, but as a retail trader, it kind of changes things a bit. But along the way, I kept making very similar derivative mistakes. I'd kind of take an idea that was logical. How many times do you think you have a great idea, you get excited? I've spent a couple of years on some of those great ideas, only to throw them away because I kept trying to get them to work, where in reality I was really on the wrong path. Um, and I'm just saying, as maybe some of you are having a similar experience. If you are, then it's a matter of, do you want to keep doing it? And it's not that this is not the right way to do anything. It's just a way. But I think if you can interpret what's going on in the condition of the market, it might differentiate how you experience or read the market, and understanding participant behavior is a big part of it. In other words, retail trader behavior. Think like a retail trader, don't act like one. Where do they put their stops? There. Well, if we know that, are we going to put our stop there? There's one question. And the other thing is, if their stops are there and they get taken out and there's no follow through, and at the moment there isn't, there might be, no clue, not my job. Do I want to now, after these weak hands are out, retail traders, sell the market, get risk neutral? If it takes out the high of the day again, fine. If it doesn't, here. Is that worth the risk reward of, let me show you. See, I look at trades. It's more to trading than just clicking the mouse. Is it worth the risk to get in here, 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 with at 17, call it 17, whatever, doesn't matter, 17 and 3/4, with a stop at 19 and 3/4, a 2 point risk on multiple contracts. If I risk 2 points, I'm risk neutral because my first scale is 2 points out. The worst that can happen is my broker sends me the gift basket, thanks for playing, and I now have a runner. And if I have a trade management process, the worst that happens is I scratch, or I gradually move my stop down behind structure if I vetted it, and my target is here. Is that worth 2 points or 2 contracts, 4 points of risk for this? 10 points? What do you think? That's what we talk about and work on in the Trader Lab. And you're all invited. If you're interested, come to Trader Lab. You go to bookmap.com. You'll see a link. Join the Discord chat. Come over to Trader Lab chat. You can download those 60 PDFs of behaviors and setups. Also, there's a primer webinar I did that'll give you an overview of this process, circles, arrows, and the rest of it. And also another webinar on the business side of trading, which you might find interesting at least. Also, if you're interested in this stream, be sure to be here when it starts, because I give an overview of statistics, the condition of the market, and the potential. Today, the overview was mean reversion. It was squeezeteria, two-sided trade. And if you were here, so come in the beginning so you know what we're looking for. And then I go through the open and how the story evolves. That's what I do exactly the same way. And this is how I trade. It's just one way. But you might be able to better deploy indicators or your understanding of the market if you get a little better understanding of the language. This is language. It is speaking. Can you interpret it? The interpretation is not based on the indicator. The indicator is overlaying participant behavior. If you're interested, go to bookmap.com. You don't have to be a subscriber. There's a lot of additional free education. Join the Discord chat, or there's a link in the bottom of YouTube. And if you got something out of this today, how about a thumb up on your way out the door? Thanks for visiting the Trader Lab. I look forward to seeing you guys tomorrow. And remember, FOMC, guys, trade safe, wear a helmet. And if you don't have a plan for it, Step aside and study it. Isolate behaviors. And then when your bus shows up, you know what your job is. Thanks again, guys. See you tomorrow, and please be here when the stream starts so you can get the full enchilada.